Okay, welcome everybody. This is Dr. Eric Woodruff, and I am with you today in this very special AEE webinar to go through the commercial energy efficiency tax deduction. Really awesome tax benefits that were enabled for not just last year and the year before, but they've been enabled for this year, which is so important that we understand this because it can really make a big difference in the types of projects you might get done and also the types of projects that you could have happen that would not have happened without this benefit. So we're going to go through all of that. I'm going to give you some examples. I'm just tickled to death to be here with you. And also want to say we've got people from all around the world attending, which is really fascinating and a testament to the breadth of the AEE network. If you've never met me before, I'm basically a CEM instructor. I'm in charge of updating the workbook, and I've been involved with AEE over 20 years. I have some clients, I've written some books, and I've enjoyed my time. But the main thing is that I'm pretty passionate about this. I really think that the environment is a big deal, and the stuff that you do, energy efficiency, is very, very important and accomplishes a lot of goals for the world and for our economies and employment and everything else. So anyway, that's a little bit about me. Most of the work that I do has the same kind of thing as a CEM, very quick return paybacks and all that kind of stuff. And my dissertation was basically on how to get more projects done and how to enable financing for that. But in my course of my career, I've got to interview people on stage at the AEE events, and I would encourage you, if you haven't gone to an AEE event, it's a great place to get excellent insights. So you'll see a lot of celebrities, and I'm the big bald white guy next to those celebrities sometimes. So some of you may recognize me from there. But again, my agenda for today, just to jump right into this, is to hit this history of the tax benefit and then talk about some examples and how you can apply it. And then at the end, we'll do some Q&A. This won't take long. This webinar will not be an hour or anything. This might be 30 minutes at the most, including the Q&A. So we're just going to jump right into it. And I want to say up front that neither I nor AEE are CPAs or tax accountants. And so, I want to do this disclaimer that everything you hear is just my opinion, and you should investigate this with your tax advisor. But I will say that I've done these things myself, and I don't see a lot of risk there, but I again, just want to be careful with that. So that's the disclaimer. So we're going to move on to the next slide, which is, the history of this. This goes back, 2008, there was these commercial energy efficiency tax deductions, which are kind of neat. And the problem with them is you don't know if they're going to be enabled for a particular year. So in, I think, 2014-15, they enabled them for a couple years, and then they re-enabled them. And then in 2017, they re-enabled them. And in 2018, they re-enabled them. And I did a special briefing to my clients to say, hey, you need to know about this, because not only is Congress approving it for the year prior, they're approving it for the year forward. And when they approve it for the year prior, it doesn't really help you unless you did projects. It's kind of like a reward for good behavior. But if they approve it for the year forward, which they just did again, and the executive briefing is the same, it's just changed the year. But the basic idea is these are extra tax deductions that basically are, if you want to think of it, additional depreciation. And the neat part about it is it's not tied to assets, it's tied to square footage. And so if you do projects that meet certain criteria in lighting, HVAC, and envelope or controls, you basically can qualify for 60 cents a square foot of additional depreciation. Now, if you're not an accountant, no big deal. This is something we cover in the CEM class very briefly. And a lot of, I think, CEMs and energy managers are afraid to get into the accounting world, but this is amazing value, and I'll demonstrate that. But if you can get an extra 60 cents or up to $1.80, if you add all three of these together, each of the partial credits, you get $1.80 per square foot. That's a pretty significant extra depreciation, which basically allows you to have a much better, a shorter payback. So if you want to learn more about this and read the fine print, you can go to Energy Star. They've updated this, and talking about how it goes through December 31st of 2020. And there might be other there, and we'll cover the renewable tax credits in a minute. But just in a nutshell, to give you a quick overview of what this is, and there's a link here at the very bottom of the page. I believe Sharon, who I forgot to say thank you. Sharon set this whole thing up, and I want to say thank you to Sharon Houston at AEE for enabling this. But she will send out a PDF to whoever wants it, and basically this link down here, but you could probably Google it and just find it. So I'm circling this thing here, this basically March 12th through 2012 through the 31st of December. If savings requirements, or if you save 10% in your envelope, that's hard to do, okay? But if you did some kind of insulation, window film, whatever, something like that, that would be enough to get the 60 cents for envelope. HVAC, same thing, 15%, and lighting more like 25%. And there's some other details about lighting, about meeting certain requirements, bi-level lighting, et cetera. You have to dig into those details, but I'm just here to tell you these are significant amounts of money, and it's not hard to do this. It's not hard to qualify for retrofits in getting this done. Let me give you an example. This is, just high level. Take a look at this. If you had a project that, had $120,000 cost and you had $27,000 in savings, you're looking at about a 22% return. And I would coach you to try to talk in those terms. Very simple. Don't get into the details about kilowatt hours because nobody cares. They just care about the money at the financial level. And if you just counted some of these tax benefits, your cost drops down to $39K after taxes, and you're still saving 27K. And you can phrase this 69% return. You could say, hey, we're saving $7 for everyone. Different people will hear it different ways. And it really doesn't matter. If you're married, you would know that you have to speak in the language that the other person would understand. So hopefully you get that joke. But you have to be able to couch this in a way that they can understand. In an example on this particular tax benefit, if you had a $1.2 million project cost and $200K in savings, normally most of us would say, okay, that's about a 6-year payback, or you might say it's a 16% return on investment. And let's just say it's a 1 million square foot building. That's great, 6-year payback. Some people might do it. Most of my clients wouldn't. They're just not interested. It's too long of a planning horizon. They need something quicker. But if you count the 179D benefits, and if you got 1 million square feet, and let's just say you qualified in all 3 categories, lighting, HVAC, and controls, HVAC and envelope, then you would have 1.8 million in extra deductions, okay? And that's worth, at 30% tax bracket, just roughly about 600K in cash, okay? Because I'm discounting that it's a deduction, it's not a credit. And so basically your project, basically instead of costing 1.2 million after taxes, you're not going to pay 600K in cash and taxes. So your taxes are reduced by 600K. So your project basically out of pocket after taxes is 600K. So now you spent 600K, basically half of what you would have spent, and your payback is now 3 years or 33% return. And I think that's pretty compelling. That might get you over the hurdle rate to make this happen, and that's the main thing. And by the way, I can see there are questions coming in. I'm going to do this very professionally because I can't read and talk at the same time, but Sharon is going to come on at the end and we'll do Q&A. So just so you know, you can go ahead and ask your questions, text them in, that's fine, and Sharon will take them and bring them to me at the end. So that's a quick example of just the high level look of this. I want to also say that if you're dealing with a tax exempt entity, such as like a government or a nonprofit, you can, if you're the architect, contractor, or the words are energy consultant, if you're involved in that project and the work was done at a tax exempt entity, you can claim as a private entity, claim the deduction on your own taxes or your company's taxes and pass through some or all of that benefit. Personally, what I like to start off with is I say, look, client, you don't know how to do this. You can't get it. I can do it for you, and we'll split it 50-50. Some people think that's too mean, but I'm just saying I would start there. You might have to pass all of it through to get a project. I don't know, to get the deal. But if you're going out to someone who does not know about this, I would feel totally comfortable sharing the savings with them, and you should too, because you're bringing them a benefit they never would have found. And they can't get it without someone like you. Now you have to be involved in the project. There's all kinds of stipulations about that. And you also have to make sure the other architects and contractors haven't already claimed this, because ones that are on the ball may have done that. So just be careful with that, but another opportunity. And I'll say this, something that has occurred to me, and I wrote about this in this magazine in this year, where I spoke about the personal benefits of this, and I mean personal to your company or to your entity. I know many of you are consultants, but I want to mention this, that if for example, if you go and do this to 5 or 6 of your clients and you find $500,000 in 179D deductions, that can't be applied and must come through you because they can't be applied at a government facility, that's awesome. You have now 500K in deductions, which means the first 500K in profits you make or revenue is tax-free. Okay, so that's awesome. But let's say you only made 300K that year. All right, so you've over deducted beyond your revenue. I'm just going to say this because I did this myself and I found it very useful, is that you could then go to your 401k that's, basically tax deferred, and you could take some of that money out of that account, put it in a Roth 401k or a Roth IRA. It doesn't really matter. Move it into the Roth category, it's not really a penalty, you're just paying taxes by doing that early, and, take out 200K, move it into the safe zone of a Roth 401k, and basically use up that extra deduction. So there's other things you can do personally that can be very valuable to you. And, I want energy managers to have, all of you to have more advantages, and this is a pretty big advantage. So that's something you can do on the personal level. Couple of slides here. And again, this is a very quick webinar. I don't want to drone on about this. The idea is very simple. You just need to go get it. And the other piece I wanted to mention, and these are slides from the CEM program, as well as, the 2020 CEM slides we just updated and the 2020 annual update. If you haven't taken your CEM in the last couple of years, this would be a place to come and get updated with refresher slides. This particular slide is basically from that book. So I'm giving credit to the CEM program, and we talk about some other things in there that I think are valuable to know. One is that the renewable energy tax credits are scheduled to expire. I mean, they went from, if you did a project last year, in 2019, you get 30% tax credit, which is even more valuable than a deduction. But as you can see, this is declining, 26% this year, 22 next year. And then after 22, it drops to zero for your house. So that's something to think about as what I would call a sense of urgency, which is something we don't often have in energy management. That's the really big problem we have in this industry, is there's not a sense of urgency to get things done. This is a sense of urgency. Get your solar projects done. Take advantage of those tax credits, which are way valuable. And I don't want to be mean to you, but I will say that if you did it in 2019, you could have also got some bonus depreciation, like 30% bonus depreciation, and some other things which are not available anymore. So again, it's reward for behavior. You want to be aware of these things. If they come up with the bonus depreciation enabler again, I mean, that means you spend 100K, you're able to depreciate 130, so that's very valuable. There are also other tax credits like 45L and some other ones you might want to look at. You also can get accelerated depreciation on a lot of these projects, like depreciating over 5 years instead of 20, or, if you attach something to a building, it's got 27.5 year life or something, you can accelerate and get it into a 5-year category. All of these things are, music to your CFO's ears. So this helps you present projects in a, much more holistic fashion and allows you to get more projects done. So be aware of these things. And if you're not aware, do some reading. I'll just guarantee you it's totally worth your time. Okay. And again, we do that in the CEM updates. Let me see if I can get back. So I'm not really pitching anything. We don't have anything for sale on our website, but there's a lot of free stuff on our website. And this particular webinar will be on the AEE website, but there are articles, the ones that I've mentioned in these slides, they are here, and you can find them and other articles without having to subscribe to the various magazines that have published my writings. So you can get them all in PDF format right here. So that's kind of handy. Some of them might also help you, again, with your presentation of your project. So that's a little bit about that. So again, really quickly, all we've tried to do here is give you some history of this tax benefit, the frustration that's there, that you can't really plan for it. You do your projects and then pay attention and see if Congress enables it for that year. And then you go back and it's a real pain. You have to go redo your taxes or ask your clients to redo their taxes to get this particular credit. But you can, at this point, go back to 2017, 2018, and 2019. And you can even go back before if you want to redo the taxes. I would say that might be a good idea. I can think of one project that's a 60K deduction. So let's say that's 20K in cash, and it might cost the client 2K to redo their taxes and just add this one line item. So, you're helping your client. That's a good thing. So the frustration is you never really know. But the great news is, for 2020, these things are real. So just like rebates from utility, you've got this window to take advantage of it. I hope you do. And that's the main point of the first bullet. Hopefully I've given you at least one or two examples of how you can apply this. And at this point, I'm going to turn it over to Q&A with Sharon. Again, I'm not a CPA. I can't really give you that kind of site-specific advice, but give me yes, if you thought at least this was somewhat helpful to you, maybe you learned something from this webinar. I'm always curious. We didn't set up a poll. We're just kind of casual that way, but just type in yes or no, whether it helps you, and feel free. What we're going to do is I'm going to turn it back over to Sharon for Q&A, and she might have some questions, and I'll try to answer them as best I can. And then, we'll do 5 minutes or 10 minutes of that, and then we'll end and let you get on with your day. Sharon, are you out there?
I am here, yes. So first question is it really additional depreciation? I thought there was a requirement to reduce basis in assets, meaning that it would be a timing difference rather than an additional depreciation.
That's a great question. Now, I suppose there's specifics there that might be, unique, but I would say it is based, the legislation is written based on square footage, so it has nothing to do with assets. Now, what the caller might be thinking about is, and I wrote about this in the Buildings Magazine article, I think it was 2016, and also on my website, there's a video explaining this, but there are I've just kind of painted the basic picture. There's actually more to gain here. Let's say, for example, you have a piece of equipment on your roof that's 10 years old, but it's kind of inefficient. It's not great. Say the condensers have gotten more efficient in the last 10 years or whatever, or maybe you switch to ground loop. So you get this new asset, but the old asset still had depreciation, to go on it. It still had remaining depreciation. So what you do is, and you talk to your accountant about this, you can write off the remaining depreciation on the old asset, and then you have the new asset plus the square footage deduction. So it actually, what the caller's asking is a benefit, an additional benefit, not really a penalty. The remaining assets that you can write off, because they still have depreciation left on them, actually help you even more. So hopefully that helps you. But again, ask your accountant. That's the way we did it, and the legislation is written strictly as square footage. Great question. Sharon, I'm ready for another one.
Okay, in the example shown, what useful project life period is considered for calculating IRR?
Okay, so that's a question that's really site specific, and you really, what you have to do is you have to ask your company how long they're willing to look out into the future. If you're a high tech company, and you're making phones or something, and the phone, a phone is good for about a year until the next phone comes out, their planning horizon is going to be very short. So even if you had like a 3-year simple payback, they might not even let you count the second 2 years because they just don't care. Now that's an extreme example, and I would take this question to go into the opportunity that, and we do talk about this in the CEM program too now, that you need to basically sell the idea to your client that energy projects, just like facility projects or ADA, wheelchair type projects, or putting in ramps or wheelchairs or doing things like that. That's more of a long-term view. It's something that's going to benefit you, and if you ever sold the building, it will benefit them too. And so we have to coach the people who are making the decisions to not be treated like a process improvement in an industrial factory that's kicking out new product every year, and more as a longer-term asset. So the question is really site specific, and you have to ask the CFO how long they're willing to count the benefits from your projects, and that can vary all over the map. So hopefully that helps the caller and gives you some ideas on how to coach how to coach the CFO to the right direction for energy projects. Sharon.
Okay, does the provision allowing the tax deduction to apply against energy consultants' tax liability apply to projects for non-profits? I thought it was just for government projects.
I'll tell you what, I believe it is government, and you'd have to look into the definition of a tax exempt entity. It might not include nonprofits, but I'm trying to remember the exact thing. But government definitely, and that means federal, state, local. That's a pretty big, broad thing. If I remember correctly, and again, I'm just going off memory, there were some projects at some nonprofits, and they may have been couched as a grant, but forgive me, I've forgotten that specific detail. But you can look in the legislation and probably get an opinion on that from a formal CPA. So sorry, I don't have a great one on that one.
Okay, how does a non-tax entity get a share of the benefit? How do we negotiate with consultants?
So depending on the person who's asking whether they're a company or a consultant, the legislation is that, one entity can take the tax credit. It's not like 10 of them, we can't just repeat that. So one entity can, capture the tax benefit that the government would not have been able to get and pass it through. Now, the legislation actually says the words consultant, contractor, or architect. And I think there might even be one other thing. But energy consultant falls in that category. If you're the contractor, falls in the category, and you can claim it. And you can also share. So if you are working, if you're a consultant and you're working with a contractor and you both are involved in the project and both of you want to claim the, say it's 60 cents a square foot for some lighting project, and you both have thought that was, deserving for you, you can just say to the government, look, there's 60 cents, allocate 30 cents to them and 30 cents to me, and you can have an agreement there. But the net tax benefit is 60 cents, and it can be shared amongst architects, contractors, et cetera. Or if you're first, then you might get it all. It's like a kid's fighting over candy, but there's only so much candy. So that hopefully helps you with that one there.
Okay. Was it just the bonus depreciation that ended in 2019, or did the accelerated depreciation schedule also go away?
I'm very sure the bonus depreciation for solar and renewables, and I might be wrong on that, but definitely for solar expired in 2019. The makers thing with a 5-year property, I'd have to look that up. I'm not sure about that, but that's something that's worth looking into. And also, I want to expand, this webinar is very high level, and there's a lot of other things that can enable your tax, benefits. Like, for example, you may be doing CHP, or you may be doing something that's innovative, and you can get some credits, especially at the local and state level. There might be additional things you can get that I didn't even mention here. So I would look into the makers situation, and if it doesn't apply to your federal, which I think it will, you can still see if it might apply at your state. And different states treat things different. A great website to look for all those things is the DSIRE website. Just Google DSIRE USA, and you'll see a pretty good listing of options that might be beyond what I've talked about in this webinar. So that's that on that one.
Okay, are commercial real estate firms savvy in these 179D deductions at this point?
I would say some are, but some aren't. I mean, I have most of my clients have no idea, and a lot of I would say people even on this webinar, you're here because you may not have heard about this, or didn't understand it, or maybe it's just too much at the end of the day to entertain, and you've got other problems going on or other things, you're firefighting. There are many other people in the construction world, in the architecture world, that have not been, picking up on this, or and again, I'm the same way. That if Congress enables it for 1 year, you kind of do that, and then unless you're really paying attention, it's hard to know that they enabled it. So, for example, when I send out those briefs to my clients, most of them are surprised, and judging by the attendance on this webinar, I would say that people are surprised when this is enabled for a year. It's not usually front page news. So I would say there's still a lot of opportunity out there, and I would encourage you to go get it.
Okay. Do deductions top off at the hard and soft costs for HVAC upgrades equal to equipment and commissioning costs?
So I would say that the legislation is written such that it's the total project cost, in traditional depreciation. But maybe I didn't understand the question right. But this is not about assets or project costs. This is about square footage. So this is just simply an additional, depreciation option.
Okay. Somebody says, very helpful. Is 179D best for government or non-profits where the pass-through would be available, or is this feasible for private ownership commercial entities too?
I think that's similar to the one we covered before. For sure on the municipal and the government, on the nonprofits, you might want to look that up. I may have, misspoken when I said tax exempt entity, but, look it up. It's a pretty simple question to answer, and do a little research on it. And again, don't forget to look beyond the federal. look at your state. Your state may have additional options that the federal level does not enable. And so I would really encourage you all to go after that. It's, just to summarize this whole opportunity, and I kind of want to wrap up the Q&A because I don't want to keep people here, and I actually have to go downstairs and teach something so in the CEM program. So I do want to just review that, this is something that comes up once in a while. Pay attention. When it does come up and I hear about it, I will tell you as best I can. I'm sure other people will be, yelling from the rooftops. I've given you some examples. Go after it. It's totally worth it. And beyond the benefit of getting more projects done and helping the environment, there actually might be some opportunities to help yourself in have a year where you put more money in the tax-free zone, and I think that's savvy, and I hope as many of you take advantage of that as you can. But again, ask your CPA advisor. Most likely you're going to have to tell them about it and give them the legislation. And my experience with that, talking to 3 different accountants and lawyers, is that they look at it and they go, okay, sounds good, so they're on board with it. You just might have to introduce the idea to them. And with that, I want to thank everyone for participating in this webinar, and I hope you have a wonderful day. And you can always reach out to me or AWE if you have any questions, or the PDF, or whatever, any way we can help you, we can. And with that, that's the end of the webinar. Have an awesome day. Bye-bye.
Thank you.